Hello, good day, everyone. Welcome to today Ultima Markets live webinar. So my name is Sean here, senior analyst at Ultima Markets. Good to know, good to see you guys again. And today we're gonna diving deep into what I consider one of the most vital technical skill in tradings, which is the multi-time frame analysis. So this is what we're going to cover today. And for the first questions, I believe if you guys, I'm not sure have you guys ever found yourself in the situations where you are trading on the 15-minute charts and it looks like a very good buy, okay, and suddenly the moment you execute your trades and the price instantly reverse into a sharp sell off. So that may be because of you're trading in the vacuum without seeing the macro pictures. So over the last week, we have covered about the trend analysis, which is how we can identify the market structures and the overall directions of the markets. But actually analyzing a trend is just a first step. So today we're going to cover on how we can avoid like what we mentioned just now, like catching the wrong trends and then you're making the wrong trades because of you're looking at the 15-minute charts. So we're going to talk about how the multi-time frame analysis can help us to prevent those painful and or what we call as the breakout, the false breakout trades that we always may encounter when we're doing the trades. All right, so this is what we're going to cover today and how we can use the multi-time frame analysis to help with our tradings. All right. All right, so before we start, here's a room map for what we have for today. Okay, so basically, this is what we're going to cover for today. So first, we're going to talk about what is the multi-time frame analysis, which is what we call as the MTF. So basically, we're going to talk about the core mechanics and the golden principles that cover this method, and how and why professional traders use the MTF. And then we're going to talk about how we're going to cover about and walk through on how we can use the three-step strategy to execute the trend tradings methods, right? From the daily charts down to 15-minute charts, okay? And then of course we're going to cover a bit on the example on the live setups and also some of the example on how we can trade using the MTF strategy, all right? So basically, what we have for today is more on the educational contents, all right? So there's not much about we're going to talk about there's not much we're going to talk about the markets for today. All right. So first thing, let's define what is the multi-time frame analysis means. So MTF, which is a short for the multi-time frame analysis. So it's basically the practice of evaluating the same financial asset price across the multi-time frame charts simultaneously. Means that you are looking through an asset, the price, okay, over the different time frames, and then you analyze it, right? So instead of looking at the narrow like the only one charts like the single 5-minute charts or 15-minute charts or 1 hour charts, actually by using the MTF, okay, which is multi-time frame analysis, it gives you a better view of the markets, so you know what the market is actually doing right now. So why is this so crucial? Why is it so important? So because simple words, okay, because it's provide a broader market view instead of just relying a single charts view, right? So and then this the key point over here is because by using the multi-time frames, it will help us to align the short-term entry signal with a structural long-term trends. Okay, so this is what we covered just now, right? I mean, you don't trade on a single time frames, and usually when you trade on a single time frames on a lower time frame, especially, okay, you're gonna make uh, a lot of wrong trades. Okay, or I would say you would encounter a lot of wrong signal over there, right? So by using multi-time frames MTF, you basically can avoid any market noise out there, and then you can avoid any false breakout, and then you can align a sharp entries, okay, on the broader time frames, on the broader long-term trends, right? So this is what we're going to cover later on. How I'm going to explain further, right? So maybe you might find this a little bit confused over here, right? So later on, I'm going to talk about uh, how we can use the MTF, right? So basically, MTF means that we analyze the same asset price across the multi-time frame analysis simultaneously to help us to achieve a good entry that's able to track with long-term trends. All right. So here are some things like you just need to simply remember this, right? So the goal principle of the MTF is basically like you want to trade in directions of the higher time frame trends and confirm an entry on the lower trends, right? So these are key principles over here that you guys need to memorize it. Okay, trade in the directions of the higher time frame trends, and we confirm an entry on the lower time frames. Okay, to help us with the sharper entries that is aligned with the long-term trends, right? So this is the goal principle of the MTF, right? So this comes to the questions, all right? So why do we need to learn the multi-time frame analysis, right? So this is based on my experience. I believe that I firmly believe that the multi-time frame analysis is one of the most critical skills you want to master if you want to be successful in tradings, right? So this is one of the most critical skill to master. And you need to master, okay, I believe, if you want to be successful in tradings. So why do I say this? Uh, Simply because based on my own experience, okay, looking across my trading cycles and amongst my friends, my trader friends, all right, almost every single one of them that able to profitable consistently is that they do apply the MTF into their analysis or their strategy. Okay, so why is that so important? So this actually come down to one of the single phrase I would mention, okay, buildings and improving our trader edge. So if you really understand about the fundamental nature of the trading, sorry, the fundamental nature of the tradings, you will realize that the trading is actually purely a game of probabilities. All right, game of probabilities means that there is no one can be right 100% of the time. Okay, so to be profitable in long terms, okay, your goal is very simple. Basically, you just want to raise your winning probability, okay, and stack the odds in your favor. Right. So the MTF is basically the key methodologies that help you to increase those probabilities and giving us that proven trader edge. Okay, so trader edge is the one that helps us to increase our probabilities. Okay, and in order to be successful in tradings, basically we need to have a high winning probability, but not 100% right of the time. Right, so this is what we want to be. To be cautious of. Okay, right. So why exactly do successful traders they rely heavily on the MTF, right? Based on my experience. So the first thing is because by using the MTF, you're able to eliminate the blind spots. Okay, for instance, like you can have the you basically can eliminate the blind spots and precisely identify the trends, right? So for example, okay, during a long-term daily uptrends, all right, so you might see some short-term downtrends uh, over the 1 hour charts or 15-minute charts, right? Because this is the pullback phase for the uptrends, right? So if you do not look at the MTF, yeah, you do not analyze based on multiple time frames, you would easily got caught into the wrong trends that is on the short term part, on the short term side, right? So with the help of the MTF, technically you're able to avoid selling, okay, during an uptrend, okay, or shortings during a down sorry, you would avoid shorting on the uptrends or going long on the downtrends, right? So this is how using the MTF could help us to avoid that, right? So the second thing is that we able to improve our entries or our entry signals, okay, through the MTF, right? So when you're aligning multiple time frames analysis, okay, when you are doing the multiple time frame analysis, you would actually uh, able to execute more accurate entry and exit. This would actually translate into a minimal drawdown, okay, and help you to maximize your risk and reward ratio. Okay, so for these two parts, I believe that you guys might be a little bit confused. So how can that be? Okay, how can we have a better entries using the MTF? So this is what we're going to cover later. All right. So the last thing is that once you able to master how to do the MTF analysis, and technically and theoretically, you are able to apply it across different markets. It means that whether you are trading on the Forex market, you are trading on the precious metal market, or you are trading in the commodities or indices or even cryptos. So you're actually able to integrate this into any markets. So once you have the MTF, technically speaking, all right, okay, you can actually trade almost every market, okay, because if I mean, not most of us gonna learn about the fundamental, right? But if you're gonna learn about technical parts to trades, okay, once you're able to master how to do the MTF analysis, basically you are able to trade on any market. So this is why we need to spend some time, okay, to be honest, to learn on the multi-time frame analysis. All right. So this is some of the reason why I would advocate for learning the MTF analysis when you are doing trades. All right. All right. So next thing, one moment. All right, let me put on my charts. Okay, okay. All right, so before we talk about the executions or how we're going to use the MTF, so let's just review again on what we covered last week. Okay, so last week we actually talked about the trend analysis, right? So this is the first stage, and the second stage will be the MTF, right? So let's do some review on what we covered last week, okay, about how the trend move. So this is very important because basically when you are doing the MTF analysis, this is what you want to find out, okay, because you want to find out what the current trend is, right? So let's just go through again on the how the trend move, right? So the first thing is that trend continuations. We covered last week, right? Trend continuations means that basically when the trends are on one directions, it will keep on going by forming a higher low on the uptrends or a lower low, lower high on the downtrends. So when the trend continuations happens, it's usually the fresh buyer or seller will jump into the market and form a reasonable pullbacks and then creating a continuations on the trends. So this is how the trend move on the continuations, all right? So the second thing is that when the trends came to a max, okay, came to a top or a bottom, right? So usually when the momentums run out, it would have a reversal. Okay. So this is when the market structures start to break and falling apart, and then comes with a new trends. Okay, for example, during trends, when you see a trend reversal, you would go into a downtrends. So this is how trend move. I mean, the second type of how the trend move, okay, trend reversal. And the third one would be the consolidations. Okay, it means that the price enter into a tight sideway without any clear directions, and then maybe there's accumulations, there will be any distribution phase, and before the next major breakout occurs. Okay, so this is how the trend move in three ways. So this is trend continuations, trend reversal, and trend consolidations. So by using the MTF, this is actually able to help us to catch how the trend move across the different time frames. So in fact, the trend can be looked completely different on each time frames. But when you look at them through the multi-time frame lens, okay, you would see that they are actually deeply interconnected. Okay, meaning that they are actually connected with each other. So for the example, uh, the low time frame trends, okay, maybe sorry, the low time frame downtrends, it could be a temporary pullback phase for the broader uptrends, right? So if you look at the trends through different time frames, you actually able to see that the trend is actually interconnected with each other, right? So let's do some drawing over here so that you guys have a clearer pictures over here, right? Right. So for example, during an uptrend, all right. So we know that, uh, excuse me, having a flu recently. So during an uptrend, wait, sorry, let me draw it better. Okay, during an uptrend, you will basically see a higher high, okay, higher low, higher high, higher low, and higher high. Right. So this, for example, this is the daily charts. The daily. Right. So let's change some color over here. All right. So, but if you turn to a 1 hour charts or 2 hour charts and things, okay, up to you, or shorter time frames, right? So basically, you will see some minor trends over here. Okay, small trends over here, uptrend, this small uptrend over here. Okay, and then so over here we see downtrends. Then you will see a reversal or some things. Okay, and then downtrend again, for example, and sideways over here, and breakout or something. Okay, sorry. Okay, so something like this, all right? Okay, sorry about the drawing. Okay, so so the you guys can look at it, right? So basically, the daily chart is on the uptrends, and then the yellow color is the maybe we say the 2 hour charts H2, right? 2 hour charts. So during the 2 hour charts, you will see downtrends over here. Okay, downtrends, and then you will see downtrends, and then maybe some consolidation sideways over here, right? So this is this is how the trend forms, all right? So during an uptrend continuations, we could still see a downtrend continuation over the lower time frames, or potentially a reversal trends in the lower time frames, right? So here's the key point, all right? So let me draw it again. Okay, so here's the key point. So during an uptrend, when the price pull back, okay, okay, use the yellow again. Okay, so this is up. We say this is day chart. Okay, so during the uptrends, all right. So we would see some downtrends, okay, downtrends over the lower time frames. Okay, the downtrends, and at some point the price may come into a consolidations or sideways, and then the breakout. Okay, so as we covered previously, right? Okay, we covered about last week, and just now we have done some review over this. Okay, so on the trends, reversal, trend continuations, or some things, all right? So over here we can know that, okay, when the price on the downtrend, so over here, okay, we talk about H2. We talk about H2. Okay, when we see a downtrend over here, and then price go into consolidations and a price breakout. So this usually means that over the H2 charts, we will see a price reversal. Okay, from downtrends to consolidations to reversal. Okay, to reversal, or maybe over here we will see some sharp reversal, head and shoulder or some things. Okay, price from downtrends go into a reversal instantly. Okay, there's no consolidations. Okay, for example, these two parts. So you can see that during the smaller time frames, okay, over the smaller time frames, you will see a consolidations, a reversal, or direct reversals. So basically, when this happens, usually this would mean that there is a potential broad uptrend continuations. Okay, there's a potential trends continuations over the broader time frames. Okay, so this is where we want to come in. Okay, where we want to join the markets. Okay, if you want to go for a long, this is where we want to buy, because okay, I'm going to talk about it later with an example. All right, so this is basically where we want to come in. Okay, for a long, okay, to trade on the trends continuations over the broader time frames. Okay, we want to buy the dips, and we want the trends to extend the continuations and make a profits. All right, so this is what we want to do. So when you use MTF, basically we able to have the most precise. Okay, I would say it's definitely a precise one, but in some sense, okay, it can be one of the most precise and higher higher probabilities entry point for us. All right, because if you buy over here, you might see the price keep on going downwards before it reverse to continuations, right? So using the MTF, basically, we can have the most uh, highest probability of the entry point, the most precise point for us to enter the markets, right? So by using the MTF, this would help us to make a more better entry. Sorry, a bit stuck with my nose. Basically, we are able to make a better entries over here, right? So how we can actually do this? So just remember three steps, right? So the first thing is, well, sorry, all right. It's terrible under the weather over here. All right, so let's back to the chart, to our slide again. All right, so just need to remember three steps. All right, so the first one is we always want to confirm the trends. Okay, first, okay, over the higher time frames, such as the daily charts or the weekly charts. Is up to you. It depends on what are the trends that you want to trade on. So, but usually we want to trade on day chart trends. Okay, so first step, always confirm your trend directions over the higher time frames. All right. So, and when you have a better idea where you want to go for, okay, what are the directions you want to trade for, the second step is you would want to switch to a lower time frames. Okay, for example, the 2 hour charts or 1 hour charts to search for a signal. And so, what are these signal? The signal basically that you want to search for a reversal signal, a trend reversal signal, or a trend consolidation signals over the lower time frames. All right. So this is the second part, and the third one would be you can switch even to the lower time frames to pinpoint a better trade entry. Means that you want to execute on even lower trades, lower time frames charts, right? So over here, these are two things I need to explain further, right? So basically, this is the first step you want to do, okay? And in some of the cases, you can join these step 2 and 3 together, okay? Okay, so for example, okay, if you are not able to spend a lot of time to look at the charts, okay, to monitor the markets because you need to work or some things, or maybe you're a student, you need to study, maybe, but you are able to, you are still want to trade on the markets, right? So but you can't spend any time on the lower time frames to look at, to monitor markets or some things, right? So basically you need to do two steps. The first step is confirm the trends, all right? And then you switch to a low time frame such as 2 hour or 1 hour to seek for the signal, okay? For example, the reversal that I mentioned just now, and then you can simply execute on the 1 hour or 2 hour charts when there's a clear reversal form or a breakout form. All right. But if you have some, I mean, you got extra time to monitor the markets, you can actually go into the step three, okay, the step three to spot a sharper entries on intraday trends. Okay? Maybe you can even trade on the intraday movements. So it's up to you. But remember, there's two steps, right? Step one and step two. And for step two, you can basically split into two or three. Okay, or maybe you call it as 2.1 or 2.2. Okay, so this is how we can do it, right? So this is some model of how we can use the MTF strategy to apply to our tradings. All right. So to let's I guess got a bit confused over here, right? So it's okay. Let's go to some example over here. All right. So this is one of the example in the past last year. Okay, because it's a bit taking the old slide to a redemptions over here. All right. So but later on we're going to cover about the latest move as well. All right. So let's take an example over here using the XAU, okay, go on the daily charts during 2025. All right. So over here, this is where you look at the charts. Okay, let's neglect this part. Okay, we do we do look at this part first. Okay, we just look at this part. Okay, before this happens. Okay, so let's assume okay this haven't happened yet, and during these periods, we can see that the trend is clearly on an uptrend, right? The higher high, higher low, higher high, higher low. So maybe you might miss out over these parts. Okay, but when the price move up, okay, maybe you trade on the long and then you take some profits and you want to re-enter the market again. All right. So when you see the price pullbacks, okay, and you know that this is an uptrend, I want to buy on a dip. Okay, I want to buy on a dip. So, but the point is, where is the end of the dip? All right. So if you look at the day charts over here, okay, if you look at the day charts over here, you look at the day charts over here, right? So you will see that there's three bearish candle, okay, and then one we call it doji or something. So what was the name? All right. Okay. Okay. It's doji or something. All right. Okay. So you will see this long wick candles. Okay. Basically, there's not a bull candles or not a bear candle instead. Okay. But by looking at this candlestick, if you study about candlestick, you will know that this is a potential reversal, trend change candle. All right, but let's not talk about this. Okay, all right. So at this point, we let's say the price come to high. Okay, and then you see pullbacks. Okay, the first bear candles and the second bear candles, and you want to go on the long. You want to buy on the dip, but if you execute your trades over here, okay, on the second bearish candles, or maybe somewhere else in the middle, okay, in the middle here, okay, and then you might face with some drawdown. Okay, maybe you will see the price pull back a little. And for example, if you're doing a little bit on a higher leverage, okay, maybe you're on the higher margins, okay, you trade on a larger lot size, and then you can't afford the price to pull back deeper, and you cut loss. Or maybe you enter the price and you see the price keep on going down on the low time frames, okay, on a 15-minute chart or 1 hour charts, and then you got panic, and then you like, oh, are gold gonna go into reversal or something? Gold is gonna go pull back further because you see there's the price breakout over here, okay, the price breakdown, the supports over here. If you look at the lower time frames, okay, so this might confuse you, okay, this might maybe it might makes you doubt yourself on your entry. All right. So because back to the point, okay, because we can't predict where the dip is going to end, okay, where the pullback is going to end, okay, and then eventually you might got panicked, you might got flash out because you are going a full margins or high leverage or something, all right. So eventually you lost the trades and you cut loss, and then or even some on the worst case you burst your account because you are not doing any risk management. Okay, so we don't want that to happen, right? So what we can do is we don't predict where is the dip, but instead we can move to the lower time frames, okay, to seek for the signal. See, so what we can do, okay, over here, this is the part where we put on the red line, okay, so this is a part over here. So during this part, you will see that there's actually a short-term downtrend forms over the 2 hour charts, okay, and you will see this even clearer on the 1 hour charts or even the 30-minute charts or something, all right. So you will see there's a downtrend here, and the price eventually going to a consolidations. So you will see that there is a descending triangles from over here. So this is where you want to start to get focused. Okay, because over here we are seeing the downtrends over the lower time frames, okay, actually move into a trend consolidations. Okay, remember trend continuations. Okay, over here this is the downtrend continuations, and then the trends move into a consolidations. Okay, because the price is converging, right? And when the price started to converge, okay, usually there's only two things would happens. All right, the first one would be a breakdown and form a further downtrends continuations over the 2 hour chart trends. All right, and the second scenario would be a bullish breakout. Okay, and from a trend reversal. And of course, in some cases, we might still see some extended consolidations. But at this point, I would consider this as consolidations instead. Okay, so basically, when the price break out over here, it would mean that the price may come into a bullish reversal. Okay, on the 2-hour charts. And when you're seeing a bullish reversal over the shorter time frame, it could mean that this could be means that this is the continuations over the broader uptrends over the daily charts. Okay, and this is where we want to come in and buy the dip. Okay, buy the dips over here, right? So if you are not a day traders or you are not looking at the charts most of the time because you need to work or some things, right? So you just can like look at the charts every 1 or 2 hours when you are free. Okay, when the candle close, you want to look at the charts. So when this form, you want to start focus. You want to keep on checking the markets, all right? So when the price form a breakout, so basically if you are not a full-time traders or you don't have time to monitor on intraday basis. Okay, basically you can just wait for the candle to close and tell us, and we can confirm that this signal is a breakout signal, and this could mean a bullish reversal on the 2-hour charts and a continuation on the daily charts. So this is potentially the end of the dip, okay, or the pullback phase for this uptrend, and this is where we want to come in and go for a long. Right, so this is how we can use the multi-time frames to look for a sharper signal. Right, so basically if you are doing a long over here, okay, you just need to put a very tight stop loss over here, okay, just in case the price break down, and then extend into consolidations or something. All right, so this is how we can use a lower drawdown, the risk of lower drawdown, okay, the risk of drawdown, a lower risk of drawdown, sorry. You can use a lower risk of drawdown to capture a major trends over here, right? So for some traders that if you have more times, you're able to spend more time. Basically, you can even go into the 50-minute charts to look for a breakout over here, okay, and then you trade on the intraday trends. Okay, you entry on the intraday basis, okay, and then maybe you can like close half of positions when you're seeing some resistance over here or any consolidations over here, then you let the profit run for the rest. Okay, so this is how you can do. So by using multi-time frame, basically you are able to spot the sharpest entry, okay, and execute trades with the lower drawdown risk and maximize your entry. All right, so this is how we can do it. So at this point, I guess we are able to understand how we can do this, right? Okay, let's go through some recent example again. Okay, we're using the gold charts, right? So for example, in the past, okay, in the recent markets, if you guys do follow us on our website, okay, our homepage, we also cover on our daily market insight or daily technical analysis post. Okay, we do update this. So we do updates about the goal as well. All right. So recently we cover about this a very nice entry over here as well. All right. So for the goal charts, okay, you can look at during the daily charts, you will see that there is a major pullback phase over here, or even go into a short-term downtrends. All right. So basically, gold is actually on a strong uptrend, and then go into long-term pullbacks. Almost a 6-month pullbacks over here, from February to July. Okay, it's almost like a half-year pullbacks phase. So this is a downtrends over here. You can see this clearly formed. All right. So at this point, we are seeing the downtrends over here, and then the price eventually comes to a 4,000 mark. Okay, this is one of the major supports over here, as you can see. And then we see the price coming into a consolidations, okay, forming a descending triangle. Okay, another example. Okay, so basically, we can assume that the price is actually moving from the downtrends continuations to a consolidations, and this is where we want to start to focus. if you want to catch the dip of this broad uptrends. Okay, so this is where we want to start to focus on the markets. Okay, so oops, let me move this. How do I move this? Right. Right. So this is where we want to start to focus on. All right. So when we see this sideways form, the next thing we need to wait is the breakout. Okay, whether it's a continuation or a reversal. Okay, so this is what we can do. So now we see that this could be a consolidation. So we switch to the 4-hour chart, okay, which is over here. We switch to the 4-hour chart, and we're also seeing consolidations over here. All right. So when the price break out, okay, when the price break out, this would technically means that we might see a bullish reversal after the prolonged downtrends over here. Okay, so this would be a bullish reversal over here. So a bullish reversal over a shorter time frame would means that a potential continuations over a broad uptrend, correct? So we mentioned this just now, right? So reversal over here, the bullish reversal over here could be a continuation over the broad uptrends, right? So at this point, we would want to start to look for a long to trade on the reversal, okay? All right, so this is how we can do by using the multi-time frame. So when you are seeing the 4-hour charts close above the the triangles, okay, or you close above the 200s moving average, or even if you are more if you are a more conservative traders or more cautious trader, you could also wait for the breakout over the resistance level, okay, which is over here. So basically, this is the resistance level, okay, and for a I mean, if you want to wait for a more conservative ones, you would wait for the daily chart to close, and basically this is where you can start to trade on the breakout. Okay, but of course, sometimes the price don't pull backs, and you might miss the opportunities. So it just depends on how you're going to execute your trades, right? So, but in this case, usually we will say that if you're looking at the 2-hour charts, basically you're able to spot the entry over the breakout over here. Breakout over here. Okay, so this is the entry over here, right? So it's a good entry over here. And for some traders, if you are you have some times, okay, and you are full-time traders or you are day traders or some things, right? So basically, this is where you can also look for the entry, okay, through the 15-minute charts or the 30-minute charts to trade on the intraday trends. Oops, sorry. Okay, over here. So this is how we can use the multi-time frame to spot our entry. So basically, you can trade over here as well. Okay, for example, the price pullbacks over the 15-minute charts or 30-minute charts. So these are all the entry you can use. Okay, because but of course, I'm not gonna explain how we're gonna do the entries. But basically, if you have your own methods, for me, I will use the moving average and the MACD to help me, okay, to spot on the lower time frames trends. Okay, so this is how we can trade, right? So this is some of the example on the recent markets. Okay, so like for example, right now, okay, for recent trends, okay, you will see that the gold is actually approaching the resistance. Okay, so now you what you can do is you can actually expect the pullbacks over here. So if you're aggressive traders, you can switch to the low time frame, okay, and then you wait for the reversal patterns to form over the low time frames, and then you trade for the short-term trends. Okay, this is up to you. Okay, but as long as you know what's the trend's gonna be, right? So maybe like you can expect the potential pullback over here, and then you can use 50 minutes or 5-minute charts and whatever you want, okay, to trade on the reversal. So maybe you can wait for the breakout over here, and then you trade on the short-term trends for the pullbacks over here as well. Okay, but of course it's not advised because it's more on the uptrends right now. Okay, but maybe for some traders that they are more aggressive, they would look for any breakout because as long as you know what you want to trade on, okay, you know that you want to trade on the pullbacks, then it's okay. You can just trade for it. You can just go for it as long as you know what you are doing and you apply the multi-time frame to help you to improve your probability of being right. Okay, I mean when the price break down, this might means that there would be a short-term reversal over here, which could be a pullback phase over the broader trends. Okay, so this is how you can do it. Okay, all right. So all right. So at this point, I guess you guys, I hope I'm able to cover. Able to deliver clear ones to you guys. Okay, so I hope that I make the good explanations over here, right? So if you guys have any questions, just let me know. Right. So before we go into the ends for our sessions for today, so let's go through a quick pros and cons for the NTF analysis. All right. So for the pros and the advantages, so I guess we already covered just now. So basically, you're able to have a better trend clarities. Okay, you're able to improve your entry and exit precisions, and then you're able to significantly reduce the market noise, and you are able to make the trades more confidently, right? And but over the con sides, over the disadvantages, I wouldn't say this is a disadvantages. Okay, it's more on a things that we need to know about. Okay, need to be cautious on. Okay, for example, when we're doing the MTF, some traders they might confuse. They might think that, oh, seems you are saying that the MTF is good, so I'm gonna analyze from top to bottoms. Okay, I'm gonna analyze from the weekly charts to daily charts to 4 hour charts to 2 hour charts and then to 1 hour charts, and then only I entry on the 30-minute charts. Okay, so this would actually cause analysis overload. Okay, so I don't advise you to do that. So try to limit yourself to maximum three standard time frames. Okay, for example, day charts, okay, 2 hour charts, and then you spot an entry on 1 minute charts. Sorry, on 15-minute charts. Okay, or if you don't want, okay, just keep it simple, day charts, and then 2 hour or 4 hour charts for the entry. Right. So try to limit your analysis to 2 or 3 time frames. Okay, and then some people it tends to confuse on the signal, right? So like what I mentioned just now, all right? So maybe some people they want to trade on the pullbacks, all right? So then you might say that, oh, this is a resistance, so I'm going to go on short because you say it's going to come down, right? So yes, the price may come down, but it's not necessary. Okay, so what you do is you can switch to a low time frame to analyze and then spot an entry. But remember, okay, don't get yourself confused because you know that when you want to trade on the pullbacks, okay, phase, this is a short-term trend. Sorry, this is short-term trends. Yeah, this is short-term trends, and this is a short-term trade. Okay, so you do not expect the trends to go on the major ones, okay, unless okay you really want to hold it. So try not to confuse that you want to trade on 15-minute charts and you expect a big drop over here. Okay, don't do that. Okay, because you always you might get confused. Okay, so if you are not experienced enough, try to uh, maintain your directions. Okay, for example, like always bias towards a higher time frame. Like for example, these cases is on uptrends, so you focus on doing the buy and wait for the reversal over the lower time frames. And if you are a full-time traders or maybe you're professional traders or you are very aggressive day traders, yes, you can do those counter trend trades. But remember, don't conflict yourself with all those signals. All right. So if you're doing a short-term trade trends, okay, you try to analyze on lower time frames. Okay, maybe you can use 4 hour charts as your main time frame. Okay, to analyze, and then you use 15-minute charts to trade on the intraday trends. All right. So this is how you can do. All right. So uh, and the last thing is people tends to confuse that you actually need to have more screen times on MTF. Yes, to be honest, need to do quite a lot of job over here because you need to switch on the time frame. But to be honest, once you got used to it, okay, when you got used to it, it doesn't take you a lot of time. And when you analyze on higher time frames, the next thing you need to do is you just switch to a low time frame and you wait for the signal. Okay, because don't like, okay, you force yourself to switch uh, on multiple time frames and then to try to force a entry signal over here. Okay, don't do that. Okay, so at least you don't spend a lot of time on the screens, and so that you can have a more clearer mindset when doing trades, right? So this is what you can do, right? So basically, this is what we're going to cover for our MTF analysis for today, right? So do you guys still have any questions? Right. So if you guys have any questions, just leave me a message. If no, I guess this is the end for our sessions for today. All right. So remember this. All right. Basically, using MTF would help us to improve our trader edge. It help us to have a higher uh, probabilities and stacking the odds for to our side. Right. So this is why we want to use the MTF, right, to have a better trend identifications, improve our precision entries, and help us to uh, able to trade across more multiple markets. All right. So this is what we have for today. Right. So thank you guys, and I hope this does help you guys a lot. And I'll see you guys on our next sessions. Thank you, and have a good day. Bye bye.